sometimes moves and markets and pricing could be confusing, and this is a very clear picture about the confusion. A lot of beginners will look at this on a daily chart on this is the oil, and would think, we made a new high at one point here, yet the market did not go down and typical move back up, and then we made a new low here, and yet the market is, we don't know what to do. Is it going to come down? Is it going to go up? It always helps if you look at a bigger picture. Looking at the weekly chart, see this on the weekly. From my perspective, the way I see it is that we made a new high on the daily, but on the weekly, the one of the stable highs here, one of the major ones here, did not really decisively break. It poked into it, it did not really break it, and we still, according to this high, we're still in a retracement, possibly down, but the evidence, it comes from the bottom level. I've been explaining this on the oil for a while. How many times we poked into this area, tried to break it, and the way I see it, I think there's a chance for the oil to come back even lower. At one point, if you do your Fibonacci retracements, this is a little bit more advanced in terms of analysis. At one point we had a 62% retracement, beautiful move up, and then broke it. We had a 78% retracement, beautiful support, and then came back down and broke it. It means there's emphasis on the crude to go even lower. What's next? We analyze it in a way that next is possibly looking for a short. We go back to the daily, and we consider this new high and new low. Nothing. We just ignore it. We think about maybe a possible short. The best possible way to look into it is to respect your volume profile. So there was a level here that basically rejected the oil, and there might be other levels, but let's see the Fibonacci retracements would give us something. I always like to incorporate Fibonacci's to my levels. From this high, we realize there's a chance for it to go a little bit higher to the next 78% retracement level. So there's a chance for it to come back up to this line. And if we bring the Fibonacci's to this level here, we are poking into a good retracement. So we have to make a choice whether we try and grab the short as soon as possible, if we look into a smaller chart, or not. So if you look at an hourly chart, you see the top level, the 74, also looks good. So regardless of the intention, your stop loss has to be above this line, because that's how it works. If we go above this line, it might continue into this continuation zone. So for a wise trader who thinks, safety first, they might think about maybe, unless it comes to 74 level and prove itself that it is prove the area to be a good resistance, I'm not going to jump in. Somebody who looks at a bigger frame, bigger time frames, or trading big swings, and he wants to, or she wants to, just put a trade and set it and forget it, maybe look at it maybe next week or so, maybe they could go in now, have a stop loss above 74. It's all relevant to your personality in trading, your trading style. Okay?